Hello everyone, this is Sridharan, founder and CEO of Wallet Wealth. So we are going to have a question series for the next few days. So I am introducing Mr. Neelakandan, who is going to ask the question, and I am going to answer all his queries, which will be helpful in terms of every investors. Mr. Neelakandan, you can ask your question.
Yes, sir. Good evening, sir. So basically, why should we invest in mutual funds, sir?
So basically, investing in mutual funds will provide you a better risk adjusted and inflation adjusted return. When we are talking about inflation, so you know what is inflation? Every day the prices are increasing on a year on year basis. So when we are talking about the inflation, which is or the long term average of inflation, which is at 6.5%. So we need to beat this inflation so that our money will be growing in a better way. So to do that, you need to choose mutual funds as an investment technique.
Okay. So is it safe actually?
See, to be very precise, any investments that carries certain risk. So even if you invest in FD, that carries a risk, and even if you invest in mutual funds, that carries a risk. So what kind of risk is what actually we need to evaluate. When it is coming to mutual funds, they will be investing in equities, they will be investing in debt, they will be investing in gold, they will also be investing in various other asset classes. So when we are talking about investing in equity, they will be investing in the stocks. So when we are talking about stock market, of course, the mutual fund investments are subjected to market risk is the keyword that carries across. But what kind of risk that we are taking and what kind of risk that we are avoiding is what we need to look at it. Even if you look at morning, when you just get up and then you do a brushing, you are using Colgate brush, which is belonging to an equity category. The company is listed. When you are taking, paste, you use, basically the Dauber, or you will be using Colgate or Promise or whatever it is. That is also a listed company. When you are taking a bathing, you will be using Lux or Hammam, or which is also a listed company. And then when you are eating in the morning, you are taking, the roti, or something. Even the roti, basically being made by Atta, which is a listed company. And after that, you are traveling to your office by using a bike, which is, basically Hero Honda, or maybe Suzuki, or any company that is a listed company. If you are looking at, even if you are going by car, the car, either you use Maruti or Hyundai or Tata or Mahindra, all these companies are listed. And whatever the inside, the products that they are using, like, the auto mobile parts, some of the companies are listed. You are using battery, which might be the Exide batteries, which is a listed company. You use, the Seat tire or MRF tire, which is a listed company. So when we are consuming this and not investing, is actually we are avoiding risk. But you are allowing the company to grow, but you are not being a part of it. So that is the risk that we are avoiding. So by investing in, yes, definitely you become a part owner of the company, but the profits and loss of the company will have an impact on your investments. When you are investing in mutual funds, the fund manager will choose which is the best avenue to be invested in. And when you are investing for a long period, any company cannot make profit overnight. So when you stay invested for a long period, let's say about 5 years or 7 years or 10 years, so all these ups and downs will average out and will provide you a better return. So that is how we can mitigate the risk. So there is no risk-free investments available in the country.
What could be the minimum investment required in a mutual fund?
By investing in mutual funds, the minimum investments that is required because there are two ways of investments. One, actually they can invest via SIP. Most of the salaried class people, they get salary, and then they wanted to invest on a monthly basis some regular amount. So this can be done through an SIP. On the other side, on the SIP, on the SIP per month, most of the typical, companies are allowing the investor to invest about 500 rupees is the minimum investments. But there are some fund houses where, they have micro SIP where the investor can invest even 100 rupees SIP per month. Is what actually, as far as the monthly investments are concerned. If somebody wanted to invest a lump sum amount, so there are typically, most of the fund houses are allowing the minimum investment of 5,000 rupees, and it can go up to 10,000 rupees in some cases.
What is the returns I can expect in a mutual fund?
Return expectation when it is coming to returns. See, primarily the mutual funds invest in various asset classes I have explained you. They will be investing in equity, they will be investing in debt, they will be investing in arbitrage, they will be investing in gold. These are the different, the investments that they will be doing. So depending on the underlying assets, so if they are investing in equity based mutual funds, so you can expect around 12 to 15% return, depends on which market category that they are investing in, and you should stay invested for a period of 3 to 5 years, and you can expect around 12 to 15% return on the mutual funds, but this is not guaranteed. This is the expectation based on the past performance. That's number one. Number two is when they are investing in debt. Debt mutual funds are basically investing in government bonds, government securities, and then they will also invest in corporate bonds and corporate securities. So when they are investing in the debt-based categories, they will be earning only in terms of interest or dividend income. So these dividends and interest, which will be providing you a little higher return than your fixed deposits. This is what actually you can expect. And on the other side, when it is coming to gold, it carries various factors with which actually the returns can be derived. So this actually the gold funds will be tracking the gold prices. Based on the gold prices only their returns will be